All right. So let's move on to the top 5 things to watch next week. And so let's get to number 5. And this is where I want to talk about the defensives versus the cyclicals. And whether you go to the hedge eye guys with their quad 3, quad 4 scenarios, but it's actually pretty basic macro stuff in terms of where you want to be in terms of duration, and whether you want the growth high beta versus the defensive bond proxy kind of stocks.
Hey, whoa, Patrick.
Yeah.
I think I'm going to tell Keith you just called this stuff very basic.
I did not say that. Oh my God! No, just kidding. But I
you don't want to be on Keith's bad side, man.
No, I
The
do
guy,
not. Don't say it. Don't tell him. No. but the point is that the defensive have been doing incredibly well. So like look at this is the consumer staples, and obviously Procter and Gamble leading the way in this, but the consumer staples have been holding up just great. The utilities continue to be in great shape, making fresh new highs.
That chart looks unbelievable.
Yeah.
All you technicians have to be chasing that. Like it looks. All the defensive names are getting just chased like unbelievable.
Absolutely.
Like
look at that fresh new high on the REITs.
Yeah,
right?
It's just
like
it's unbelievable because that is what's pushing the stock market higher. Well, not higher, but it's interesting that that's what people are pushing themselves into. That is what they're chasing at this point.
Yeah, but don't you think that when you're looking at the bond market, that is just a manifestation of the fact that that this is just one big asset rotation? Like, is that, and also would that not be what you would typically expect to see at a topping formation of a stock market?
Listen, you had me until that last bit, Patrick. I just think that we're going to get a rotation back into real stocks again, and not this kind of scared feeling of you got to buy utilities and staples. And I think that those things are interesting things to watch, because I think those will be the sign that when they start underperforming, that you should go out and buy the broad market again.
So what I will agree with you is on this. Which I don't know. Actually, I won't speak for you. You can tell me whether you agree or not. But while I remain bearish, while I believe yields will eventually go lower, at some point in this calendar year, in the remaining 6 months, we will have a multi-month mean reversion on all of this. And the yields and the defensives are all going to mean revert this big move that we've seen. And maybe during that period, the cyclicals will get an uptick. But I just don't envision that this is just an easy trade to keep chasing this. At some point, the people that are chasing this are going to get washed out.
Well, it's nice to see us agree on something, Patrick.
Okay.
Guess we go to number 4.
So that means we should go. Everyone of our listeners should go long these defensives.
That's right, because
we
they're
agree.
going to continue to go. Yeah.
Oil.
Breakdown in oil.
What the hell?
So Patrick, you must be happy. Like I was laughing when you told me that when I saw oil was going down, you had a big smile on your face because you're bearish. I think you told me that you were bearish oil, and I was like, what aren't you bearish on? Like it was like,
I'm not bearish on bonds.
Exactly. That's what you responded. You said, I'm not bullish. I mean, I'm not bearish on bonds. Everything else I'm bearish on. You know what? Like, I just think, what do you think? Tell me what you're thinking on oil.
Well, I think we're at an incredibly important technical level, right? Like a very common technical pattern is and it's also an Elliott wave and so on, is the zigzag kind of correction lower, and arguably no different than the stock market today. You could argue that this is just a consolidation of an uptrend. And one of the, in my mind, this kind of $58, $57 area is actually a pretty important support line. I mean, in theory, if the bulls can hold the line in this area in the coming weeks and get the price back up into the 60s, then this might have just been a correction.
Yeah.
But I'll tell
one thing, Patrick, I want to point out is the fact that if you look at Brent, it's a little bit of a different story. And I think we had Chai Girl on, and she was the one who highlighted the fact that the Brent WTI spread, she kind of forecasted that was going to go to widen, in which it is. I think
$10
this
bucks.
is
Yeah.
this is a kind of a USA story, and I still think Brent looks pretty good. And
Oh, this chart is the same, Kev. Come on.
no, it's not. It's not the same. And go look
The,
at the WTI Brent spread.
the drop in the last, let's say, 5 days was about a $6 drop, about 8.5%.
Holy shit, Patrick! It's gone from 44 to 76, and the thing's moved down $10 from the highs.
Just
and you
stop
guys are
for
getting
a
all
second.
bearish.
Just stop for a second and let me
Yeah.
make my point. Okay, can you agree that this drop in the last week was about an 8% drop, or about $6? Right?
Okay, but
so when I go to crude and I look at this drop over here, yeah, so it was a $6 drop and 9%. So you're talking about the fact that Brent dropped 1% less than crude, and somehow Brent's holding up better. I call bullshit on that, bud. That's the same shit in a different package. I think that oil got slammed, and it wasn't just a WTI story.
Okay.
Anyway,
Well, fair.
but
Very
the
funny.
point I'm making is that I too many beers, isn't it? Like at this part of the show, we're well.
Yeah, I know, it always devolves. It
well,
always
and
devolves at this point. Okay, go on. Just make your point. Let's go on to number 3, buddy.
I think that this is a make it or break it moment for oil. This correction can just be a correction. For this to be a shit show, we have to see sustained price action below this kind of 57, 58 level. Then the more ominous kind of downside risks become.
So, Patrick,
prevalent.
you're giving me the typical technician
Yes,
response.
absolutely
If
I
it,
am.
if it goes lower, I'll sell it. If it goes higher, I buy it. Okay, let's go on to number 3.
Number 3. Next week, in the middle of the week, we have Bank of Canada with their rate statement. Obviously, they're not cutting yet. Everyone's anticipating them to stay at, like, was it 1.75? I think we're at in Canada.
Yeah.
On the rates. But I'm curious how much Polos is gonna start to admit that the Canadian economy is looking like shit.
Yeah, I think he's going to be slow to admit that, but I think that he's wrong. I think the Canadian economy is suffering badly. The real estate, which has been a big driver for the longest time, is come
Properly
off.
slowed.
Yeah, and it's not the end of the world. It's not kind of 2008 redux, but it is a problem, and we're going to underperform the U.S. and there's nothing more to it. Like,
do you think that this primarily manifests itself in the currency?
Yeah, I think the currency is one of the elements that'll and the trouble is that I'm a little bit of an oil bull, so I kind of struggle with that a little bit. But I do think that it's difficult.
You didn't mention that at number 4.
Yeah, no, I did. Listen, I'm bullish oil. I think that I took this opportunity. Oil vol kind of spiked. I sold puts. I think it's dumb. Like, I think it's nuts. Like, I think we're headed higher, and you guys are all too bearish.
Okay.
I think this is just a slight correction.
All right, so back to number 3. So
Yeah.
your conflict between oil and the Canadian economy.
So
is what?
I just think that as oil goes higher, we're going to be relatively insulated versus like in Australia, but that basically Canada is going to have some trouble with this real estate slowdown that we're going to experience. Like, it's just foolish to think that we're not going to have a like that somehow we've magically repealed the kind of the cycle of real estate, and that there's no way that our real estate will continue going up forever. There's not a chance.
Yeah.
And it's
All right.
finally here.
Number 2, Kev, is the U.S. GDP. Coming out next week. And one of the things that I'm curious about, look, I think we can both agree that even if there was going to be a recession in the U.S., the likelihood at this stage of a negative GDP print in this calendar year is that window is closing pretty quick. But I'm in the Lacey Hunt camp, which is that GDP will continue to be under pressure for the remainder of the year. And I think we're going to gravitate lower, not higher. Where are you standing on this?
Well, Patrick, as usual, you're in the Lacey Hunt camp. You love that guy. I joked on Twitter that you had pictures of Lacey in your bedroom.
Yeah.
I think it's true.
I do.
I really think
my wife keeps taking them down. So
that's right. And she actually phoned me and said, "Could you please, intervene?" It's like that show on A&E about intervention. We have to have one for you. The reality is that GDP is a backward-looking number. So I'm not that excited about when we see this next U.S. one. It's going to be weak. Like we're having a pause. There's no doubt about it. The global economy is having trouble, and the U.S. is finally, Powell pushed and raised rates to a point where it actually caused some problems in the U.S. Do I think this is a big deal? No. Do I think that this is the start of something more ominous? No. But in the meantime, all you guys are hyperventilating about every bad economic number that we see.
All right. Number one, watching China, right? I mean, there's the manufacturing PMI is coming out at 9 p.m. on Thursday next week. I have a chart just showing the last wave of these. Now they're forecasting it to come in at 49.9, which is just under the 50, which is a contraction. But when you look at the chart, I mean, they've already had a sequence where 3 of the last 5 months were already negative. And so we've seen a complete slowdown in China. And it'll be interesting to see whether that was a trough that we saw at in the start of 2019, or whether or not we see sustained weakness in the coming months. Any opinion on this?
Well, I don't know, Patrick. I'm assuming you're negative because you're always like thinking the world's ending. So, it's not that I think China's going to do so great. They're having trouble. They're struggling more than the U.S. with this trade war, no doubt about it. I'll concede that. But I don't know if they're going to shit the bed, like, so to speak. Like, I don't know if we're going to have like this collapse that everyone's expecting. And that is what I worry about. Is it's more than the question about whether the Chinese manufacturing ticks down, is whether it ticks down versus expectations. And if you can tell me where expectations are, I think that they're abnormally depressed and that it wouldn't take much for them to beat expectations. But shit, what do I know?
All right. Well, but they are really interesting things to watch next week. So I think Monday is a holiday, so shortened week for all of our American listeners. Enjoy your long weekend. We just had ours this past weekend.
That's right. So Patrick, before we go on, though, I think we're going to do something. You and I are getting together on Monday, right?
Yes. And it's time for you to concede.
Yeah, I think it is time for me to concede. Like, I think we had a bet.
Yes, we did have a bet.
What was the bet?
Well, all of our listeners know, our loyal listeners know, but we showed the semiconductor chart.
And why don't you pull it up?
And we simply we identified what it was. It was just right after. It was
Intel. It was Intel because Intel had happened, and you got super bearish because Intel news was bad.
I was not bearish. Our bet was very simple. Our bet was that I asked the question whether or not semiconductors were their role as the leadership during the bull phase was over, and the simple my view was it was, and your view was that it was still going to be in the top 5 performing sectors, and you were brutally wrong.
Yeah, I have to admit I was wrong. And I guess I owe you a burger. Thank God I only bet a burger.
Monday, because the markets are closed. I'm taking you up on this.
Yeah, I know. Agreed. We're going to go out, and I'm going to buy you, a burger. We're going to go. I'm going to admit that I was completely wrong. Now, having said that, I just want to kind of say why I was wrong. It's no excuse. I was still wrong. But I contend that without the trade war issue, this wouldn't have happened. Oh. So, in essence, you were betting, and the reason you won this bet
was Trump.
Was because of the trade war. And listen, maybe you were smart enough. Maybe you knew that was going to happen.
I had no idea.
Yeah, whatever. But I think that is why the semiconductors are doing so badly. And good for you, Patrick. It's nice to see you win one.
It's all you can say trade war all you want. I think Intel shit to bed long before the trade war was an issue, and I think that this party was over. Maybe under the different circumstances it would not have been as ugly.
Yeah,
but I still.
But you were always. I
was going to always win. I was going to always win.
There you go. So be it. There we go. The dark arts wins again. Voldemort took over the castle.